Good morning, everyone. Welcome to Reitmans Canada Limited's fiscal 2027 first quarter earnings call. After management's remarks, this call will include a question and answer session when institutional investors and qualified equity analysts may ask questions. To join the question queue at the time, you may press star then one on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star then zero. Before turning the call over to management, listeners are reminded that today's call may contain forward-looking statements within the meaning of applicable securities laws. Forward-looking statements involve risks and uncertainties, and undue reliance should not be placed on such statements. Certain material factors or assumptions are applied in making forward-looking statements, and actual results may differ materially from those expressed or implied in such statements. For additional information, please refer to the disclaimers in the forward-looking statements section of the company's press release and MD&A for the quarter. Reitmans Canada Limited does not undertake to update any forward-looking statements. Such statements speak only as of the date made. I would now like to turn the meeting over to Andrea Lombardi, President and CEO of Reitmans Canada Limited. Please go ahead, Ms. Lombardi.
Thank you. Good morning, everyone. Joining me on the call today is Carolyn Goulian, RCL's Chief Financial Officer. Yesterday afternoon, we reported our financial results for the first quarter ended May 2nd, 2026. Our news release, financial statements, and MD&A are available on our website and have been filed on SEDAR+. A slide presentation for today's call is available on the Events and Presentations page of our website under the Financial and News heading. If you have the presentation open, we'll get started on slide 4. RCL operates 3 distinct brands, each with a clear and differentiated value proposition. At the end of the first quarter, our footprint included 217 Reitmans stores, 85 RW & Co locations, and 85 Penn stores. Together with our refreshed e-commerce platform, our national network of stores allows us to serve Canadians from coast to coast. RCL delivered an improved first quarter compared to last year, with clear progress across the business despite a difficult economic backdrop. Net revenues increased 0.8% to $160.1 million, supported by a 0.3% lift in comparable sales, including e-commerce. Our store investments are beginning to show meaningful traction as retail store revenues rose 2.9%, driven largely by the strong performance of non-comparable locations. On the cost side, the benefits of our transformation are becoming visible. SG&A declined 2.2%, reflecting a workforce reduction and a more efficient operating model. Combined with stronger store performance, these actions contributed to a $5.2 million improvement in adjusted EBITDA to a loss of $5.4 million, while our net loss narrowed to $6.3 million. Taking a look at some key highlights for each of our brands in the quarter, Reitmans launched its 100th anniversary campaign under the theme, "A Century is Just the Beginning," including supermodel Coco Rocha and Quebec actress Catherine Saint-Laurent as ambassadors. Over the past 100 years, Canadian women have trusted Reitmans to evolve with them. Maintaining that trust remains at the center of everything we do. Our centennial marks a pivotal moment for the brand, one defined by confidence, clarity, and renewed ambition. The centennial also brought a modernized brand identity, including a refreshed logo and partnerships with the Toronto Tempo, the Canadian Arts and Fashion Awards, and the McCord Stewart Museum in Montreal. We also opened a successful new concept flagship store at Carrefour Laval just outside Montreal. The renovated space delivers an immersive, refined shopping experience that seamlessly blends design with the customer journey, redefining how she engages with the brand. Early results have exceeded our expectations. In Penn, we're continuing to modernize the brand through product, store experience, and community connection, and Q1 showed continued progress across those pillars. In intimates, which is a core traffic driving category, we created a new experience for customers to shop by need, moving from product-led merchandising to need-based navigation supported by strong in-field execution. This was reinforced by the launch of Second Skin, Penn's comfort-led bra innovation, which launched in Q1 to drive conversion and modernize the intimates experience. In addition, we are advancing a more disciplined real estate strategy to reinforce our leadership in plus-size apparel, including exploring mall-based locations and an improved design experience. Meanwhile, RW&Co continued to strengthen its foundation through disciplined execution, strong inventory management, and customer-led growth strategies to drive momentum across the business. Stronger creative execution, elevated assortments, and sharper brand positioning continue to reinforce RW&Co's accessible luxury evolution. This sharper brand positioning included a partnership with the Junos and saw top Canadian musicians walking the red carpet and the stage in RW&Co fashions. The Montreal Eaton Centre Experience store emerged as a key proof point for the brand's future retail direction, where we set the stage for a more elevated and personalized experience featuring new brand colors, curated assortments, and localized elements within the design. In Q1, the Montreal Eaton Centre became the top-performing store in Quebec. After quarter end, RW&Co completed the transformation of its Toronto Eaton Centre store to their new concept introduced last fall at St. Bruno. The beautiful 7,000 square foot Toronto Eaton Centre flagship store immediately saw a strong increase in sales and has exceeded every expectation since opening on May 29th of this year. As we move forward in the second year of our strategy, our focus remains squarely on initiatives that strengthen brand relevance and position the business for sustained profitable growth. Before I turn the call over to Carolyn, I wanted to take a moment to comment on the challenging economic and geopolitical environment. The reality is that rising fuel costs and the ripple effects they create are significant, and the inflationary pressures are hitting everyday Canadians hard. We remain focused on being a destination where Canadians can rely on finding the best quality fashion at the best value. We are confident in our strategy, our brands, and the work underway to build a stronger, more resilient RCL. And with that, I will turn things over to Carolyn to discuss our financial results in more detail. Carolyn?
Thank you, Andrea, and good morning, everyone. Please note that all comparisons I will be discussing are for the first quarter ended May 2nd, 2026, against results for the first quarter a year ago, which ended May 3rd, 2025. As usual, all dollar amounts discussed are in Canadian currency. Looking at our top line, as you can see on slide 11, net revenues for the first quarter rose by $1.2 million, or 0.8%, to $160.1 million during what is typically our seasonally weaker quarter. The growth was achieved with 7 fewer stores and less inventory than in Q1 of the prior year. Our sales dollars per transaction were also higher than a year ago. As Andrea mentioned earlier, net revenues from retail stores increased by 2.9% in the quarter, with much of that growth coming from newer stores as part of our investment in our store fleet. Comparable sales, including e-commerce, increased by 0.3% in the quarter. Gross profit for the quarter increased by $0.6 million to $89.1 million compared to $88.5 million a year earlier, while gross margin held steady at 55.7%. Our adjusted EBITDA improved by $5.2 million to a loss of $5.4 million, with the improvement driven by a combination of our stronger store performance and a $2.2 million or 2.2% decrease in our SG&A expenses. The lower SG&A amount was largely driven by a $2.4 million decrease in wages, including the workforce reduction as part of our strategic transformation. We also had a $1.1 million decrease in advertising expenses and travel costs, and a decrease in consulting fees not related to strategic transformation expenses. These decreases were partly offset by increased store-related lease and other costs, and an increase in depreciation and amortization costs on property, equipment, and intangible assets. Looking at our bottom line, we had a net loss of $6.3 million or 13 cents per share, which was an improvement from the net loss of $10 million or or 20 cents per share a year earlier. Turning to the balance sheet, we ended the quarter with $126 million in working capital, including a strong cash position of $101.9 million. We had inventory totaling $125.1 million at quarter end, which was $9.9 million less than a year earlier. We continued to carry no long-term debt other than lease liabilities, and we had no borrowings outstanding under our bank credit facilities. Finally, a quick update on our normal course issuer bids. During the first quarter, we bought back 235,600 shares, returning $0.5 million to shareholders. From the inception of the NCIB on August 5th, 2024, to the end of the first quarter, we've repurchased a total of 745,200 shares. This concludes my financial review. We would now like to open the call to questions. Operator?
Ladies and gentlemen, we will now begin the question and answer session. For institutional investors and qualified equity analysts, you may ask questions by just pressing star 1 on your telephone keypad. If you would like to withdraw a question, press the star then the number 2. Again, that will be star, then the number 1 in your telephone keypad to ask question. We'll just pause for a brief moment to compile the Q&A roster. Again, if you would like to ask a question, simply press star, then the number 1 on your telephone keypad. We have no questions at the moment. I'll turn the call back over to Andrea.
Thank you so much, and thank you to everyone who's joined for your continued support and for joining us today. We look forward to speaking with you again next quarter. Have a wonderful day. Thank you.
Ladies and gentlemen, this concludes today's conference call. You may now disconnect.